First and foremost, thank you very much for coming and taking some time out of your night to listen. Really, really appreciate it. So tonight's topic, we're going to go really quick and simple. It's going to be rewiring your trading rationality. And basically doing so will help you capitalize on much better risk reward trades. So if you have any questions whatsoever during the lesson, just feel free to drop it in the chat. So I'm going to ask you guys an open-ended question. Just drop it in the chat. Would you take puts here? You see the market dropping and it drops really hard. Would you take puts here? Or what would you do in this situation? If you saw, okay, you came into the market and I'm just arriving right now, what would you do? Okay, I'm getting a couple different mixed answers. I'm getting waiting. I'm going to take puts. I would take calls. I would wait for confirmation. Okay, awesome. Lots of different thought processes. So I just want to continue and kind of break it down. So you have to think about it in an intelligent way. So we started from 410 and we went all the way down to 407. So we went down $3.50 almost in what, 10 minutes? Clearly there's going to be some sort of a pullback, right? There's got to be some sort of a pullback. So this is where a lot of retail traders get pretty much, they mess up, right? They think, oh shit, the market's just dumping. I gotta, I'm getting FOMO here at the bottom. I missed all of this. So I'm trying to get in, I'm thinking, okay, I'm going to be a smart trader and jump into puts after the market just tanked $3.50 in 10 minutes. Right? This is not the correct thinking. We want to rewire this and we want to understand, okay, clearly there's going to be some sort of a pullback. There has to be some sort of a pullback. I'm not going to be chasing when it already broke through the structure way up here. If I missed out on this move right here and I didn't capitalize on it, then the trade is invalidated. I'm not going to be chasing this halfway down because my risk to reward is garbage, like literal garbage. Because let me just show it in a real life situation. So let's just say I chased from way down here. My stop loss is probably not until right here. So I'm just going to pan it over because this is from today. We'll talk about that in a second, but this will be a real life example. So I say I enter way down here. My stop loss, technically speaking, isn't until above this, which will be invalidating my thesis. So let's just say it up there. And I already know this area was a liquidity zone. So this is where, like right here is where we bounced before in the beginning of the day. So that's my target. So you already see this is a 1-to-1 risk reward trade. This is garbage, like literal garbage. If you see these type of things, you do not trade these. These are like C setups at best. Now, let's say if I took it in a more intelligent manner and I took it way up here when I identified that we're getting rejected off of a key level and I start seeing some volume breaking down, then I can maybe enter before the move starts. So let's just say I enter up here, like I'm a smart, savvy trader. What's my stop loss? My stop loss is very minimal right here. And I already know my target. This is the same exact target right down here. So my stop loss is much more minimized. And look at my risk rewards, 4.5 to 1. You take these setups every single time. If the volume is aligning and the price action, everything's good, you take that all day long. Right. So, and just to answer your question real quick, how do you put these boxes? There's a thing called a long position and short position in your, which one is it again? Right here. So it's for Thinkorswim, or excuse me, for trading view, it's a couple down and it's just long and short position. You can do the exact same thing and Thinkorswim as well. So anyway, you want to visualize your trades like this. It's very important because if you visualize a trade like this and you're like, plain days seeing a 1-to-1 ratio, you don't trade 1-to-1 ratios. They're not very profitable. So then that brings me to my next point. People that trade puts down here usually end up getting burnt 85% of the time because the big boys are entering puts up here. They're not entering puts down here. So we have to be understanding that we as retail traders do not move the market. Plain and simple, we do not move the market. So we have to figure out where the big boys are sitting. We want to enter where the big boys sit, right? So in this case, let's just kind of do a little bit of painting the picture. We had a very, very strong bounce yesterday at this exact level that I drew, right? This exact level that I drew. So if you knew from just yesterday's price action alone, nothing even else, why would you take puts down here? Right? You do not want to take puts down here, especially after it drops so significantly in 10 minutes. This is where you basically do two things. You first, you would see, okay, how is price action going to react in this area? Because I know historically yesterday we bounced very aggressively. We bounced very aggressively off this area. So first, I'm going to be patient and see if volume steps up. If volume bullish presence steps up, that's good for me. I want that because I can capitalize on a very, very good risk reward trade. So we'll talk about that in a second, but that's scenario one. First, I'm just sitting cash waiting to see what happens. I'm not going to be chasing puts when it's already, the move already basically happened. So scenario two is, okay, let's just say, no bullish volume is stepping up here. There's nothing in sight and we're making lower highs. So we're just kind of keep going down and down and down. We're making lower highs and lower lows, which is a bearish structure. So if we're making a bearish structure in that key area, this is telling me that sellers are in control here. So I can then look to short. So if you want more of an aggressive entry, it would obviously be in this box. If as long as there's selling pressure and we're making lower highs and lower lows, you can aggressively enter here. But if you want more of a safer entry, you would wait until this box gets invalidated and the price action is underneath. So that's pretty much scenario two. So we already structured our trading plan beforehand, right? So in this case, we already knew that there's an area right here. So I'm waiting patiently, right? So what happens is I want to then look on maybe the 3-minute chart to see if price action looks good. In this case, we get a really strong wicking candle right as we kind of get into that. So let's just say I don't get the picture perfect entry. Let's just say I enter maybe right around here. I don't enter at the bottom. I enter, I'll give myself a realistic entry. So I already know that this was the previous low. So I'm going to keep my stop loss underneath of that. So it's a pretty relatively smallish stop loss. And then I already know where my first real target is, right up here where we got rejected. So that's right there. That's almost a 4-to-1. So if you think about it, just by being patient and waiting not even 10 minutes, right? Not chasing the downside right here, I got a great setup. Like this is a very good setup. Now, let's just say I even got a better setup. Let's just say I got a better entry. Maybe I entered right here on that wick, Now this is almost a 5-to-1. And let's say this is my final target, but I ended up actually having a runner. Let's just say one of my runners. So this is my planned R multiple, which is basically saying what my trading thesis is before entering that specific trade. I plan to have a possible 4.5-to-1 risk to reward ratio. Obviously, these things can change. Clearly, if the price action is like right down here and I start to see a major rejection, obviously I'm going to start cutting. I'm not going to just be like, oh shit, this is my target. I gotta only cut here, right? So you have to be mindful of trade management, like how, because every single trade is going to be different, even if it's in a minute way. There's going to be some sort of differences. So having targets in mind is great, but you have to be okay with keeping an open mind, because sure, this might be my my final target up here, but if I'm starting to see some massive resistance right around here, yes, I'm going to be taking profit, or at least trimming some profit off the table, right? So that's something that's super important to talk about. And then secondly, let's just say I secured all my profit up here. maybe I left one, maybe two runners, so two contracts. And then I already knew where my next real area would be. So this is where I got rejected last time, right? So then I can just, if you think about it, so you have one runner, that runner is almost a 9-to-1 risk to reward ratio. A lot better than that garbage 1-to-1 you were considering taking, chasing puts to the downside. Now, let's just say you're in an absolutely perfect, trading environment. You leave a runner and you start sniping some of the top. So this is your real big target, because this is where we got rejected 2 days in a row. Let's just say you had one runner, and that's almost a 13-to-1 risk to reward ratio. Like that's some insane gains from just one day of trading and understanding pretty much just two things, like two things only. Hey, I knew from yesterday that this area is a high probability bounce area in this case. Okay, I knew that we just, fell 3.5 points in 10 minutes. There's got to be some sort of a bounce. There's got to be some sort of a relief rally. Okay, that's, piecing that together. And then piecing together that we start to see a volume spike, bullish pressure came through right at that key area. This is turning into a very high probable trade with risk to reward in your favor. So these type of trades you want to take all day long. You don't want to be chasing the downside if you miss it. Like if you miss the impulse, or if you miss some of the pullback, you miss that breakout, or excuse me, you miss that trade opportunity, and you want to just not FOMO in and try to, just chase. You want to rewire your mentality to just be patient and figure out where, in a sense, the big boys are looking to enter or are looking to, cut their position. So this is something that you can, like this type of stuff happens very often. That, we come into a very key area, whether it be a resistance area, whether it be a support area, and we get a massive reversal, right? Now, I'm not saying you're going to snipe the bottom or snipe the top every single time. I mean, but even if you catch, half of this move or a quarter of this move, this is still some damn good risk reward trades, right? Like you can make a good bit of money off of understanding a couple different things. Like you don't have to overcomplicate the process with, oh, I have my TTM squeeze, my VWAP, my moving averages, my Bollinger Bands, like, having all these indicators at once. Like I didn't use any indicators. What indicators did I talk about today? Nothing. I just knew, okay, there's an area here. Okay, there's volume stepping up. Why overcomplicate it? Trading seems difficult on the outside, which it definitely is, but it's more mentality wise. It's not technical analysis wise. Like technical analysis makes up probably 20% of trading. Your mind, your emotions, your psychological barriers makes up 80%. So that's just kind of how you want to re-rationalize your thinking. If you miss a significant move, don't chase it, because there's always going to be some sort of a pullback. Look, we went up, how many points did we go up today? We went up like, what is this? Like what, 10 points almost from the bottom? Look how many pullbacks there were. Look how many opportunities you had to possibly get into the trade, right? Like the pullbacks will happen. There will always be pullbacks. So don't chase it at the top here, because your risk to reward is going to be garbage, and your contract prices are just going to be inflated. You're getting an unfair deal for your bang for your buck. Now, another thing I want to mention very quickly, usually after like the second pullback, so in this case, here's the first, I mean, you get a tiny bit of a pullback here, but I'm not going to consider this as a real pullback. You get a pullback here, you get a pullback here. Usually after that secondary pullback, it doesn't become as probable for you. In this case, look at this pullback. Third pullback was, we didn't really have much steam afterwards, right? Third and fourth pullback, we didn't really have much steam. So usually general rule of thumb is if you miss the impulse move, either up or down, and you miss the first two pullbacks, that trade's invalidated. You will no longer chase it. Because if I came in, let's just say I missed this entire drive up, all of it, and I'm starting to see this, I don't trade this, because like, if you think about it, this has already moved up almost 2%. It's already moved up almost $8. you miss most of this trade. You know, like I'm not going to trace this because my risk to reward is no longer really in my favor. Sure, we got a little bit more steam, but that came in like right at the end of the day. Nothing really major happened right here. We kind of just chopped around, right? So like these are the things you want to be thinking about, and you don't want to be, in a sense, chasing your trades. You want to be letting the trades come to you. Let me read a question real quick. How did the big boys know there was a reversal coming? Now, it's not really so much as them knowing, it's more as we want to know, because the market is against us, the retail traders, it's against us. We want to know possibly what the big boys are trying to do. In this case, you can kind of see that there was areas of value here. So we had a lot of a strong bounce here, and then we also, you can kind of see we got rejected here, we played through around here, we played here. So like this area was significant, right? So we want to have significant areas in mind of basically high liquidity. So what I mean by high liquidity is basically where participants are willing to step up, either whether it be selling or buying. So it's very important to understand that. I actually made a video about supply and demand that goes over definitely more topics about that. Just for sake of time, I'm not going to go over it, but I will link it into the chat real quick before I forget. 1 second. If you have any other questions, by the way, just drop it in the chat. We'll talk about it in a sec. Okay, here is the supply and demand video. I would highly recommend checking out. I posted that in the chat. Okay, so next one. What are your indicator lines? The blue lines? Oh, like these blue boxes? These are just areas of, I made another video about this as well. It's basically my key probable areas of bounces or rejections. In this case, like you can kind of see here, as soon as we came to this box, we got rejected. We came to this box, we got picked up. So like these are just kind of my zones of probability of a reversal, either to the upside or to the downside. I also made a video about that. I will link that in the chat as well. Definitely some good homework for you guys. Next one real quick. Do you always wait 15 to 30 minutes at the open? Yes, I do. I usually do not trade. I've learned from just personal experience that I don't perform very well in the first 15 minutes. It's too choppy, it's too volatile. I don't like to trade it. Some people are different. They can handle that. I don't like to do it. I usually like to wait the first probably 15 to 30 minutes before entering any trade. Sometimes I'll wait an hour. Like if I don't see a good setup for me, like a good high probable setup, I don't take it. I'm not just going to trade because, oh, it's been 30 minutes, time to trade. No, I'm not going to do that, because if the setup isn't there, if my criteria isn't shown, I'm not taking it, right? What is your thesis for tomorrow? Good question. Anything can happen overnight. We could get possibly another run to maybe the 420 area, then get rejected, or we could pretty much stall out overnight, get rejected, because we did just run up 10 points, right? So there's going to be some sort of a rejection. It just depends on where. It depends on, maybe it'd be 420 area, or maybe it'll be right here at this 419 area. Then we start rejecting. Really, like having one specific bias in mind isn't really ideal. You want to have different scenarios. So like, hey, scenario 1, scenario 2, scenario 3. So this way you can kind of have different theses in mind, so you can structure your trading plan around that. If scenario 1 happens, or if scenario 3 happens, type of thing like that. Hope that answers your question. Okay, I know you said that support and resistance is good enough and keep it simple, but what indicators do you use mostly? Good question. The only indicators that I really like to use is pretty much these. I like to use, now I'm strictly talking about day trading here. For my swing trading, it's a little bit different, but just only talking about day trading, I like to use the moving averages, which is EMA, so the exponential moving averages, such as 50, 200 and 300. So like the bigger moving averages. And then I also like the VWAP. That's pretty much the only thing I use indicator wise. And then I just couple it in with other things such as volume and price action. And then I also use level 2s and times and sales. So I kind of just couple all that in together with supply and demand. So I kind of, just piece everything together kind of like a puzzle piece. Any other questions? I just wanted to do kind of a quick, real simple video just to kind of just show you, case you guys that you don't want to be chasing trades. You want to be thinking the big picture and, think more like, in a sense, a hedge fund and where they would enter instead of an average retail trader. Because average retail traders chase this. They will chase this. That's why 80 to 90% of traders fail, because they get FOMO, they get emotional, and they chase that. That's literally euphoria. Like that's a euphoric candle that market makers want. And then that's why people chase. Do you bounce around on the time frames, or what do you look at mostly? Good question, actually. So I like to do time frame. Definitely, I like to look at different time frames for sure. I don't like to just stay on, the 2 minute or the 5 minute or whatever. So what I end up doing is I like to flip it around quite a lot. So if you want to check out the time frames I use, they're all right here. I usually use anywhere from like the 2 minute to probably the 2 hour while day trading. And then once we come into the second half of the day, I then look out how the overall market is doing. So I'll just be like, okay, we're in the second half of the day. What's possibly the 3 hour looking like? Okay, the 3 hour looks pretty nice. So I could structure a trade like that. So like, it's really key to just kind of, bounce around for different time frames, because one time frame can show you entirely different picture from a different time frame. Hope that one helps. Any other questions? Anything at all, just feel free to ask. I mean, I guess you could say that, yeah. The head and shoulders definitely did play out though. Just to what you were saying, is this a head and shoulders on the weekly? Yeah, you could definitely say it did, but it did already kind of play out with this rally down right here. Do you use pre-market candles in your supply and demands? Yes, I do. I always keep pre-market everything. I don't turn pre-market off. What platform do you use? I use Thinkorswim for trading, and I use TradingView for my charting. New to trading, any beginner tips? I would highly recommend educating yourself, learn. No need to rush the process. Market will be here for you tomorrow. Market will be here for you for a year, right? So just consistency, building the groundwork is very important. What is your profit taking strategy? I actually did a video about that one as well. Just give me a second here. If you want to check out my YouTube, I'll link that in the chat. I do have a lot of nice videos for people to check out in there. But I did make a profit video for that as well. Oh, good. That's a very good question, actually. Can you explain what the green and red prints mean in the time and sale? So he's basically talking about the order book. So that's actually a super miscommon thing that people think. They subconsciously, their brain says, oh, this number is green. That must be buying. That must be people buying. Or this number is red. That must be selling. This is incorrect for the order book, such as that one. Because it's basically, if you look at it, it's basically just upticks and downticks. So it's kind of hard to show it when I don't have it up, but it's pretty much just say you see on the tape, okay, here's 100, okay, this is green, and then the next one you see point or just 99, that's red because it's a downtick. Whereas the next one you can see 102, that's green because it's an uptick. So just because it's green does not mean it's buying And just because it's red does not mean it's selling. I made another video about that. It's in my YouTube if you want to check it out. It's under level 2 times and sales. Any other questions before we end it today? Anything at all? No. Do you mainly set your levels on 5-minute intervals or the hourly? No, I do not. I use large levels only. I do not make profit targets or any price action levels on the 5-minute. Hope that one clears it up. How long did it take to be profitable? Good question. Everyone's different. Some people it could take 6 months. Some people it can take 2 years. Me personally, it took about probably a year and a half or so. Like full transparency, I've probably blown about 10 accounts, but I didn't quit, and now here we are today. Hope that one answered your question. I can do that for a different video for you, just for sake of time. How do you do your prep work for the market? Like, what do you do the night before in pre-market? That's a good video topic I'll make for you guys next week. So I'm going to end it here. Just wanted to do a really quick session for you guys. Just going to do one last really quick announcement before you guys go. A few people asked me in the chat to do a more of a in-depth mentorship. So as you know, like the traditional ones, people will train you for like 8, maybe 12 hours. I'm going to do a little bit of a different route, and I want your time for 3 months. So I want you to be committed for 3 months. So this way, I'm able to kind of gauge your progress and we can make adjustments together. So instead of letting you loose after like 8 hours of, educational sessions, I want your time for a while in a sense. And we're going to be reviewing every single month afterwards your trades. So this way we're able to, properly figure out what you're doing wrong and fix it together. So if you're interested in that type of thing, just message me privately and we can talk about it. It's going to be kind of a smaller class, so the spots are definitely limited, but please be serious because it's going to be 3 months of your time and 3 months of my time. But anyway, thank you guys for listening. Hope you have a fantastic rest of your night, and I'll see you guys tomorrow.